Hello guys, welcome back to Pips Masters. In this video clip we're going to be talking about what is Forex Masters. So I hope you're going to learn a lot from this as we get started officially. So in the first part of this video we're going to be talking about what is Forex trading. We're going to be looking at a brief history about the financial markets. We're going to be talking about how Forex markets work. What do we mean when we say currency exchange? And you're going to also be looking at the major Forex market players. Later on, we're going to be talking about the characteristics that make the Forex markets unique. What are the major factors that affect the Forex market? And to end our video clip, we're going to be looking at the requirements for you to become a Forex trader. Okay, so welcome to basic introduction to Forex trading, guys. Let's focus on the first part of it. What is Forex trading? Forex has a few names such as FX, currency exchange, spot Forex, or in a general term, you'll hear people talking about the financial markets. Forex is over-the-counter trading of currencies that involves buying and selling of currencies at determined prices. In simple terms, it's an agreement to buy one currency against another, so you will be selling the other currency at an agreed price. The volume traded in Forex is about $6.6 trillion per day, as per the research done in April 2019. Earlier, it was rated at about 5 trillion, if I'm not wrong. Yeah. Forex markets are open from Monday to Friday on a 24-hour basis operation throughout the day. Okay, so we have 9 major currencies traded around the world. The major currencies are US dollar, we have the euro, we have the Japanese yen, we have the British pound, we have the Swiss franc, we have the Canadian dollar, we have the Australian dollar, New Zealand dollar, and recently South African rand. This has not yet been approved to be one of the majors, but most of the people are including it as one of the major currencies being traded around the world. So yeah, let's move on. So a brief history about Forex. Forex is traced back to the 6th century. Okay, the history is not that important when it comes to trading, but try and learn more about it if you're really interested. It's all up to you. You might need to look at 1. The gold standard, the Bretton Woods system, and when 1996 when the retailers were allowed to open and internet trading started. So let's go to the next point, how the Forex markets work. And we're going to also be looking at the major players in the markets. Okay, so the first player is the big banks. We have the big banks, we have the brokers, we have retail traders. The Forex market structure involves big banks, brokers, retailers, or traders. So we're going to be talking about the big banks first. The big banks are the market movers. Okay, they analyze data from countries such as imports, exports, political stands, among others, and decide on the impact on the prices. Basically, they determine how the economy affects a certain currency. You need to understand that the market is your friend. Let it show you the direction it's likely to go or to move towards. Some of the big banks that we have come to know are the JP Morgan Chase, we have Citibank, we have HSBC, and some Chinese bank, among others. Okay, so the second major market player is the broker. Any retail trader needs a Forex broker to access the market. The broker is an interface between the trader and the big banks. They offer platforms such as MT4, MT5, and online trading platforms where you have access to the real prices of currencies at any given time. They give you an opportunity to take part in the movements made by the currencies within the day. Okay, the broker places your trades with the big banks. As you execute your trades, they make money by charging you on the trades you make. They charge you on the spreads. You'll hear the broker talking about for a certain trade to be open, they'll charge you a spread of a certain amount. whenever you go of a certain amount in pips. Whenever you're going to open a new trade, your trade will begin with a negative. Basically, that is the broker charging you so for you to open the trade. Okay, that is what we call the spread. Next, you're going to be talking about the retail traders. Basically, this is you and me. We take part in the markets as third parties through our brokers who give us access to the markets. You deposit your funds to the broker, then you create an account to access the markets, and then you go make money. Okay, so this is basically the structure. Hope you guys can see this. We have the banks, we have the big banks, then we have the forex brokers, then we have the forex traders who come in third place. Okay, yeah. So in the next point, we're going to be talking about characteristics that make forex markets unique. What are the major factors that affect the forex market? Okay, huge trading volumes in the world. We have talked about this earlier. The markets are open from Monday to Friday with several sessions in between, causing volatility and massive movement. Low margins of relative profit compared with other markets of fixed income. The use of leverage to enhance profits and loss margins with respect to account size. Okay, so these are the sessions we have. Some of them: we have the London session, we have the New York session, we have the Sydney test session, you have the Tokyo session, among others. Okay guys, you can see from this picture on your left, this is the number of volumes. This is how we've grown in amount of volumes that is being traded within a day, a single day in forex. Okay, so the next thing we're going to be talking about, what are the requirements for you to become a forex trader? Okay, so the first thing you need is the fast internet. You need to have access to fast internet, because when it comes to the forex market, a very single second can cause a very big impact to you and to your trading account. Okay, second, you need a laptop. And you need or you can just have a desktop. You need to access the charts. You need to access these charts. You need to have an MT4. You need to have an online platform that gives you the prices of the markets as they move. You may also need a phone or a tablet. Okay, so both of these basically give you the same work, but in real sense, when you're using your phone, the charts are a bit squeezed, so you'll not end up having the best view of what is happening to the market. It's a bit compressed compared to what you'll get from a laptop or from a big screen. Okay, then you need a lot of time. You need to have a lot of time with you so that you can be able to study, because you need a lot of reading. Initially, you need to get the details, okay, before you set out to start trading with your live money. So that brings us to the next point. You need to have some amount of money. You need to save up. You need to start with some cash. Okay, in forex trading, we are in the aim of making money. We are not going to say that with a small amount of $10 you expect to make $1 million. Okay, so you need to have some good cash, and by good cash I don't mean you should have millions. No. You can always start with $100, $250, but if you want to be on the safer side, I'd suggest you save up to $1,000 before you get started with your trading. Okay guys, in the long run, this $1,000 will go a long way compared to the $10. The reason behind this is that with a big amount of money, you're going to risk more. We're going to be talking about money management in the long run, but you're going to have a bigger risk and you're going to have a bigger winning rate as compared to $10, where you get, if you are supposed to make a profit of around $100, you might end up making $1 or $10 with a small account. Okay guys, so that will be all for today. You can reach us anytime, contact us with any questions. We hope to see you in the next video.